Now we also are joined by Sunil Subramaniam for further discussion on this matter. First question to you, the wide expectation was that there will be an approval for new F&O norms, but it has not come, at least in this board meeting. However, for mutual funds, there are certain regulations including insider trading, for passive mutual fund light regulation, and also new asset class. How do you see the impact of this?
It should help expand the penetration of mutual funds because, what has happened is that the new asset class that has been brought about is intermediate between PMS and the regular diversified schemes. So many investors, because you have to put 50 lakhs minimum in one scheme in the portfolio management, this will now allow even people who have total 50 lakhs to put 10 lakhs in 5 different schemes. So what this is allowing is people who are willing to take more risk, but they don't have that much money to qualify for an AIF or a PMS, they are doing that. That's a very good thing. In fact, it should help expand the industry. I think all these regulations are favoring mutual funds, and I think SEBI's direction is to make more and more of the F&O traders and the retail equity buyers to use mutual funds as a vehicle to access the equity markets. And I think these are all more steps towards that direction. I would welcome this.
Another change which is mentioned in the release is towards investment advisors and research analysts. Now, new norms applicability will be there after this comes into effect. How do you think it will impact? Do you think there will be more registered investment advisors after this?
Yes, I do think so, because after so many years of introducing the RIA, Registered Investment Advisor Scheme, it had not really taken off. Now, the RIA scheme is very good because what it does, it aligns the interest of the advisor with the customer, because RIAs can only charge the customer for fees. They cannot take any money from mutual funds, whereas mutual fund distributors take money from the mutual fund. So SEBI has been keen to promote RIAs because then the client's interest, the investor's interest is aligned with the advisor's interest, and ultimately the investor will choose A advisor or B advisor based on who provides the best services. So I think any relaxation in this whole RIA framework is welcome, because we should see the tribe of RIAs grow. 1,000 odd RIAs is the current level. We should be having 100,000 RIAs. So I think it's a very good move by SEBI. After testing out the RIA regulation, seeing the response, we are now relaxing it so that more people can become RIAs. And I think this is highly welcome, because otherwise the fin influencers who are currently portraying their things on the YouTube and other digital channels are misleading the investors, and SEBI has been increasingly concerned about unregistered advisors offering advice on the digital social media channels. So I think this is a very good move to bring them onto that fold.
Also joined by HP Ranina to discuss further on SEBI approvals in important matters. One of them which caught my attention was insider trading norms, which has been approved in this board meeting. Mr. Ranina, did you get a chance to take a look at it, and how do you see that this will impact the investors and also the community?
No, I have not had a chance to look at it, but I can say from what has been mentioned on your channel, that is an excellent move, because, the people have been suffering as a result of insider trading. And this move, I think, will make things more transparent and ensure that, those who have classified information or information which is price sensitive will not be able to use it to their personal advantage. So this has always been what we have been asking for, to protect the interests of investors, the small man who doesn't have access to a lot of information. And I think this was to be expected. I think SEBI has to be congratulated for what they have done, though it has happened a little late, but never late than never.
Right. Now, after these norms come into effect, what do you think, as far as these norms are in place, do you think there will be changes in the kind of cases which we have seen in mutual funds, or otherwise in terms of some of the securities?
Yeah, there is bound to be a change, but it all depends on how it is monitored and implemented by SEBI. You see, the rules are all there in place, but ultimately, people will still try to take some advantage or the other. And the implementation of these rules, the way they are monitored, that remains to be seen. So that will take some time to fine-tune the actual procedures and the processes But once that is done, I think it will certainly help the common man, the investors at large.
Right. If we also have Mr. Subramanian with us, one question I would like to ask, while FNO norms have not been approved till now, at least in this board meeting, but it was already under discussion as a consultation paper was already floated. As far as these new regulations on new asset class are concerned, these mutual funds will be allowed to have naked positions in future and options, which was not allowed earlier. So what do you think is the criteria or the thinking of SEBI behind it?
So the criteria of SEBI, I think what they are coming from is they are saying people are losing money in F&O options going directly, and mutual funds were earlier prevented from doing naked options. So this gap, if people have a desire and a need to do it, why not get it to do it in a regulated way by an entity which has got expertise and diversification? So I think that the ability of the fund managers to then take these naked positions in the benefit of the investors means hopefully these retail investors who want to trade will look at these schemes as an alternative option to that. And if you can get them into the regulated framework, then you can prevent them from losses. Otherwise, you've seen the data which shows that investors suffered heavily in the F&O space. So I think this is an attempt to bring them more into a regulated framework, because these fin-influencers are not regulated. People are giving advice without taking a regular registration with SEBI. So once you get the investors to taste the regulated framework with mutual funds, we are also using naked options to do that. The learning curve for investors also will improve, and fund managers also ultimately at the end of the day, they have got years of experience, high qualifications, they understand the markets very well. So I think this is a long overdue thing that now SEBI has allowed, which of course there will be checks and balances in terms of how the mutual funds run it. But it's a very welcome move and I appreciate it.
Last question before I let you go, regarding the rights issue. Now SEBI board has approved that rights issue will be completed in 23 days from the date of issuer board meeting approving, which the timeline currently was more than 300 days as per the analysis which was done by SEBI. Now how important do you think it is for investors community, and do you think that reduction in timeline will help more of such kind of fundraising?
Yes, absolutely. Because I think what's happening is within 300 days time, between the time they launch, the purpose of the rights issue, the end use of the funds, all that could change. And investors who are early in the stage will get a very different experience to those who join later. By keeping the 23-day window, you're making sure that whatever is filed in the prospectus, in terms of the end use of funds, the money can be raised quickly and deployed. So I think that it's very, very critical that that linkage between an investor's interest and the actual end use of the funds will be now more protected, and this will help in efficient capital markets to perform well.
Thank you so much, Mr. Subramaniam and Mr. Ranina, for joining in at this hour. Also, for sure, the steps which has been taken by SEBI, the approvals which has come in the SEBI board meeting today is going to go in a long way for investors, as it is not only mutual funds but also insider regulations and the reduction in the timeline of rights issue. This is it for now in this bulletin. Keep watching ET Now for more news and updates.